What's going on, millionaires? My name is Dee Dee.
My name is Tramel.
And tonight we're going to come to you with an entry point video. So at this point, you should understand your fundamental basics. You should understand your strategy, specifically tailored to naked trading. But this also applies if you use SK5 or if you use the Bollinger Band method, whichever method. We're going to talk about how once your confirmations are met, how do you determine your take profit and your stop loss, and how do you actually enter the trade as well on an even lower time frame. So we're gonna go ahead and get started. We're gonna continue to use the same pair that we've been covering tonight. So we're gonna go ahead and jump right into it. Tramel, we're gonna let you take over. You wanna clear it?
Yeah,
no. Or no disease?
Yeah.
All right. Arrows too?
Yeah. So without your analysis, there's no entry points. So you need to go watch the video before this that tell you about the technical analysis naked trading videos. The naked trading video when we describe what to be looking for, how you got these support and resistance lines on here, how do you know what you're gonna do next. Until then, you don't know what entry points is. You shouldn't be watching this video if you haven't watched those previous videos, right? So as you can see in the previous video, I said this candle was our entry, right? That candle was our entry. That candle is our entry. And
so what do we, okay.
The first thing you're gonna do is once you've seen off of your naked trading analysis and you say that, okay, it's gonna sell, you're gonna look for a bearish engulfing candle on higher time frames, which is the 1 hour right now. It's selling right now. It was a bearish engulfing candle. So then you put an eclipse around it. You go down to the 1, 2, 3, 4. Put an ellipse around it. And that's what I did. I put it right there.
Over the confirmation candle.
Over the confirmation candle. You see the selling candle. So honestly, I can scoot it over. And put it over, right? So now this is your entry, straight entry. So I'm going to write this down. You're going to go down to your first step is to put an ellipse over the confirmation candle, which is the bearish engulfing candle. All right. So then you're going to go down to the 15-minute entries. 15-minute entries.
Remember what I told y'all, whatever happens on the smaller time frames, whatever happens on the bigger time frames happen even, the smaller time frames are a breakdown. So that's why we're going to the 15-minute time frame to see what's really going on behind the scenes of the 1 hour that we were on.
So I want you to write this down, take your notes. You want to find structure. High highs, high lows, lower lows, low highs. You want to see a break of structure. On sales or the lowest low for the previous low. For buys, the previous high. Break a structure. Right? Then your second step. So this is the first one. First step. Your second step would be a pullback. You want to see a valid pullback. Pullback / retracement. For a buy, for a sell, bearish, top of the pullback, buy, bottom of the pullback. Buy low, sell high. Buy low, sell high. Sell high. What else? Your next step, engulfing. And that's your entry. Engulfing, bearish or bullish. Depending on the trend or on the sell or buy.
Or your analysis from the higher time frame.
Did I?
From higher time frames.
Higher time frames. Screenshot this, please. Screenshot this, and I'm finna explain. So as you can see, I seen this is my candlestick.
Can I make a comment real quick?
Yes.
So y'all remember on the 1 hour, he circled only one candle. It was 1 or 2, bro?
1 or 2.
It was probably 2?
Yeah.
Okay. But as you can see on the 15 minutes, way more candles. Why? Because the lower time frames are just a breakdown of the bigger time frames.
So think about it like this. How many candlesticks form in an hour? 4. So it should be 4 candlesticks.
4 15-minute candles.
4 15-minute candlesticks on the hour chart.
Mm-hmm.
So as you can see, you'd have grabbed this. This is the previous low. The reason why I say this is previous low is because the reason why I said this is the previous low is because
sorry. It was the video from the Zoom had saved. Sorry.
Okay. The reason why I said this the previous low is because look at this low, right? You want to make for the confirmation. So on a sell, as you are in, you looking for your analysis, you're saying it's going to sell. So you're going to look for a break of structure. You want to see that it break this line. It has to break this line, right? Once it break this line, okay, it gives you a confirmation. Okay, yes, it's finna sell. Yes, it's finna sell. But also it have to pull back for you. So when you seeing some type of pullback, you got to see some type of upward movement going into a buy, a little short buy, that's a pullback on a sell, or a little sell going into a buy for a buy, right? So on this, you're looking for a short pullback. And honestly, it pulled back right here. It pulled back right here. So once it pulled back, and it formed, your next step would be pull back, find a bearish engulfing candle. As you can see, that this red candle engulfed this blue candle. The red candle engulfed this blue candle. So your entry is after this candle. And as you can see, the market, this is gonna be a sniper entry because as you can see, you're not in the reds for that long. And if you're in the reds, what's 5 pips to, what you gonna, 32 pips? What's that? 35 pips, So what's 5 pips? Your ratio, you can set your stop loss. Your stop loss should always be the previous high. So your stop loss would be, or your stop loss goes off of what you're willing to lose.
And we'll talk about that shortly.
So this is how you catch your sniper entries. You look for A break of structure, number one. Pullback, number two. If it's bearish, if you looking for a bearish movement, then at the top of the pullback, you need to find a engulfing candle. So at the top of the pullback, it's a bearish candle. That's your entry. After that candle close, that's your entry. You enter. You don't care what it do.
I have a question.
What's up?
So what if somebody would have seen, you see this major red one right here?
Mm-hmm.
What? Okay. So let's rewind really quick. So y'all see how make sure you notate how, if you don't get it, make sure you watch it. He put this line here because he put it at his previous low point. He says, soon as it breaks structure and pulls back to that structure, you find another bearish candle, and that's when you get your entry. So sometimes it may pull directly to that break of structure. Sometimes it may not, as you can see. But Tramel, can you explain why some people might not have considered that a pullback? So could they have waited until this one?
Yeah, you also could have waited till then, right there.
That's very obvious one.
But yes, actually, this candle engulfed this blue candle, right? The reason why I just didn't wait until then is because, look, now you have to enter, because you got to think about it. Let's be reasonable. You got to enter off of when the candle closed. So look, you're gonna be scared that you're not gonna see any, going straightly in the profit. You're gonna be in the reds for a little bit, but you only gonna be in the reds for like
no drawback, really.
No drawback, just 6 pips.
It consolidated a little bit before it dropped.
8 pips, yeah, 8 pips. You're gonna like, man, what the freak? 8 pips ain't nothing though. You see what I'm saying? 8 pips is not nothing to what you just didn't call. You didn't call 35 pips, but that could have been an entry. This could have been an entry, or this could have been an entry. It don't matter. Also, long as you see a pullback and you see a bearish engulfing candlestick pattern, and the engulfing candlestick pattern, the next candle is your entry. After that candle close, it's your entry. That is your entry. Once you see that close, that's your entry. Like, look, check me out. It went down for a little bit, but guess what? It pulled all the way back up through a bearish engulfing. It threw a bearish engulfing. That could have been another entry. You could have just wrote it all the way down.
Mm-hmm.
You could have wrote it all the way down. These are great entry points. This is how you're gonna catch great entries, and you're not gonna be in drawback for a long time. And what I mean is by that, you're not gonna see too much red on your screen. You're gonna go directly into profit. So that's all I have for you guys for the 15-minute entry. And
okay, I have a couple things to add after you.
Mm-hmm.
Yeah,
I'm done.
Okay, so sometimes some people try to force seeing things. If you don't see it, you don't get into a trade. You always wait. This market generates $5.3 trillion a day. There's always going to be setups. We wait for quality, not quantity. Do not chase the market. So sometimes if you don't see anything on a 15, you can switch to the 5-minute and look for that same ellipse, a break of structure. And as you can see here, same thing. It broke the previous low that he even drew on a 15. It pulled back through a bearish engulfing sale. But this is that same one that he initially talked about. It's the same obvious one. So just keep practicing. Watch this video over and over again to practice entry point. Remember, this only applies after you did your analysis on your top-down analysis. This is how you enter a trade. So also what I want to add to this is about pullbacks overall. And then we're going to talk about how you calculate some people say, okay, now that I get in, where do I put my TP or my stop loss? And that's where the overall trend comes back into play. So you could do this prior to your entry point. We could have added it to the naked trading video, but it's more appropriate here. So say you didn't do your 15-minute entry yet. And I hope y'all screenshotted that or rewind it, because I'm going to take it off really quick. Let me take these off. Now, if you practice your proper risk management, right? We always tell you all, the only thing you can control in this market is how much you lose. How much you lose. That's why you need to utilize proper risk management. Mm-hmm. You never want to risk more than what you can gain. So let's see if I can go. If you watched my basic training video with the PowerPoint, I talked about proper risk management. So now, remember, we only enter off of zones, right? And as we always been using this example, so we say, oh, it was about to sell before it happened, right? So on TradingView, you can go to your 1, 2, 3, 4, 5, 6, 7 tool. As you know, something called long That's short. That's another term for buy. Short is another term for sell. So if you click short, because we thought it was going to sell, you'll get this tool. You'll put it at your support and your resistance line, right? I want you to notate that this middle number is your pip. This middle number is your pip count, and this shows you your risk to your reward. So say you got a $100 account, you got a 0.01 lot size, and you're willing to lose $3 at the most on this trade. So that's 30 pips. Why? Because a 0.01 is 10 cents per pip. So I can move 30 pips and lose only $30 on this trade if it just so happened to go the opposite way. So you can adjust it to 30 pips. So that means your stop loss need to be at least 2 or 3 times greater. Because you can do 30 for 30, like your stop loss 30 pips or your TP 30 pips. And as you can see, it still hit it. But you always want to have like a proportionate ratio. Perfect. So say that was 60. I don't want to adjust it. That's basically it. This is a 1 to 2 ratio. My stop loss is 30 pips. My take profit is 60 pips. And as you can see, the numbers on the left side, 1.2, the red number is your stop loss. The green number, not the green line number, this green right here is your TP, right? Now, what I like to tell people is, and how when we get trades in our trade groups, how they have multiple TPs, I tell people you can always divide your daily goal into multiple take profits just in case it doesn't hit your overall one. So sometimes you can just go over here. It's a horizontal line. I like to make it dashed in white. And you can put like, so your entry point will be your support and your resistance, right? You do this, and then you'll go to your lower time, your 15-minute for your entry point, of course. But to have multiple take profits, you can just divide this into like, say I want to put right here, TP1. That number can be my TP1. This can be my TP2, anywhere. And then your ultimate end goal can be your TP3. Or you can do another one and have TP3. And then your end goal, your TP4. So those numbers. So remember how you calculate your take profit and your stop loss. Because some people use MetaTrader 4 to mark up. If you're on the go, you're using the app. Sometimes you don't have time to look at your trading view and utilize this tool, or utilize your FX calculator. On your MetaTrader 4, I want you to also understand how to manually calculate your TPs and your stop loss. If, like you said, if you had a $100 account and you had a 0.01 lot size and you're only willing to risk $3 on this trade, your stop loss needs to be 30 pips away from your entry point. So if you watch your basic videos and you understand how to calculate pips, you would just, if I was in a sale and I got in right here and I'm trying to manually calculate my stop loss on MetaTrader 4 or something, I would just add 30 pips to my entry point, and that'll give me where my stop loss is. And I would just add 60 pips to get my take profit. If you need help with that, feel free to ask or reach out to someone. I don't want to overcomplicate it, but it's just a calculation of pips based on your lot size and your proper risk management for the trade. And as you can see, it would have hit our take profit. Also, some people utilize next zones as their take profits. That's another way. Instead of just adjusting it to 60, I could have just said, I'll make the next zone from the original zone, my next zone, my TP, and still divide it accordingly. So that's a helpful way as well. So some people say, I don't ever want y'all to forget the overall concept of this naked trader. Remember, we was in this downtrend. We were only catching the sales, right? Let's take this off. So after you do this, side note, that's when you do your 15-minute entries to figure out when to get in, as Tramel just showed us. But say you missed this sale, right? Or say you got into this sale. Remember, we're in a downtrend, we only catching sales. Say you got into it and you're like, oh, that was good. I want to wait till I get in again. Another entry point is the next pullbacks. Pullbacks are another entry point. You can always enter trades at a 0.01 and wait to the next pullback to increase your lot size, or you can get in just another point. So if you would have got in right here and caught all this, you would have waited till it pulled back again to get in again and catch this. So now you will wait until it pulled back again to get into a second trade. If you missed the first one, or if you just want to get another entry, you can just literally ride the wave up and down once you get this strategy down pat. So for the most part, that's pretty much it. We got our 15-minute break of structure, our pullback, our break and retest, our engulfing patterns, our TP, and our stop loss. So remember, if it's too difficult, you can always go to the other strategies such as SK5 or stochastic and Bollinger Bands and understand those methods with the indicators that to help you see the chart. But keep it very simple. Keep your chart simple. Don't overcomplicate it. Keep watching these videos. Do you have anything to add, brother?
No, I'm ready. I'm ready to rock and roll.
Mm-hmm.
Focus on the entries. Rewatch this video. It's quick for you to rewatch it, and go mark up a chart and practice it. That's all I have to say for you. Remember, on a sell in the downtrend, you're catching long sales, short buys. Forget the buys. You're not even catching no buys until you become an advanced trader. In the uptrend, you're catching long buys. Forget the sales. You're not catching no sales until you become an advanced trader.
You're not catching no pullbacks.
No pullbacks.
You only catching the trend is your friend. So we hope that was helpful. If you need any help, feel free to reach out. I'm Dee Dee.
I'm Tramel.
And y'all have a good night.
All right.